Eric in Long Island is asking a process question. He understands how you should be using the iVol premiums and discounts in the process, but not clear on how you should be thinking about the Z-scores, iVol trends, RVol trends, et cetera. Can you walk us through how we should be implementing these components?
Yeah, well, I mean, you just have to think about it as another tool in your toolbox. So you know how you like, I work with my dad a lot, and I'll never be able to do what he can do with tools. But if I go to his toolbox and I look, if he says get a screwdriver, you know how many screwdrivers are in that toolbox? You know how many different shapes and lengths and colors of, and well, what one? Initially, and he'd be like, oh, you're an idiot, get out of here. Of course you need to have multiple tools if you want to build something that's relevant, stable, and again, produces something for you over time. So again, implied volatility signals are quite simply one other weather vane to think about when you're making a decision. So the example that I used this morning is that instead of a 28% implied volatility discount in gold, where I was selling gold, now it's a -4. So it went from -28 to -4, relatively speaking, and behaviorally speaking, sentiment-wise in options, futures and options space, that's good. It's better than buying gold, any other day that we could have bought it. And if you get an implied volatility premium because Art is freaking out this morning, and another 10 million people are too, which I don't think that many people own gold, then there it is. You get to transact at the edge with an informed view. Like tomorrow morning, I will not be surprised at all if that implied volatility -4 says plus something. Then you're like, wow, it's the first implied volatility premium that we've been able to buy gold in 2 months, or a month at least, and that's great. It just augments your decision making. It doesn't drive it, it augments it. So again, you don't know what screwdriver you're going to need. You got a lot of them. Again, you come to my garage, I don't know what half of them do because my dad put them in there.
Yeah, totally. And I'll just for more to help folks with process, I'll kind of break this down. We have a variety of indicators and analyses that we use to help investors manage macro risk. I would say the things like the quads, the fundamental analysis really helps you with the what. What do I want to be long? What do I want to be short? Not at every price and time, but what creates the list, the buy-sell list?
What could I be?
What could I be long?
Where could I have interest?
Where could I have interest? Where should I focus my research time? And then things like your signaling process, obviously, and then the implied volatility, realized volatility relationship that we show, that's kind of the win. That helps you build conviction on, do I act now? Why am I not acting now?